as the implications of the Middle East developments are uncertain, but they said they plan to only do one rate cut this year, which is pretty big hindrance for risk assets. You also see how gold and silver, how it was reacting today in platinum, because in lieu of a rate hike, rate cuts, and in lieu of quantitative tightening, precious metals should be able to contract down and do what they need to do, but that's neither here nor there. We really need to focus on, and what we'll go over today, is we're going to be focusing on really heavily XRP, the 10.5% drop we had. I want to touch on the fact that 86.6% of holders are underwater right now, and you'll see it strategically done in my title. How I put XRP down 10.5% on the day. 86.6% of holders are now underwater, and we had a major rejection at $1.56. I appreciate all of the prayers for my son. His fever officially is broken. He hasn't got anything for it in the last about 34 hours. He ended up with a severe inner ear infection. And as you guys know, they put these noise canceling headphones on him in school, and it led to an ear infection. And we know that's a direct correlation now because he hasn't had them on for 4 months and he hasn't had one. And then they started doing it again 2 weeks ago, and here we are again. So he got some medication, he got some anti-nausea. He's been able to keep down all liquids today. He got a couple ounces of formula about an hour ago that stayed down. He's even had a couple of bowel movements, even though they've been a little pretty watery, but that's to be expected because he hasn't had any main substance. So he's on the right track. He's more bubbly today. He's more like himself. Nothing by mouth yet, but that's the beauty of the G-tube. We're able to keep him hydrated and keep him properly hydrated so he doesn't get dehydrated and all that stuff. So hopefully things continue to go the way we are. So we definitely seem to be on the right track. I'm very happy to do this live right now. This will be the one live today. I really had a fun time in the class today with the rest of everybody. We talked about the dark pools. We talked about, there was just a lot of stuff we talked about. And from a market management positioning and understanding things that might not meet the eye, the high frequency traders and things like that, what we got to, I think it's a value to everybody. I know not everybody's going to take the class, but it's a very, very appropriate thing to be doing. I'm going to put in here real quickly about, just so that there's a link in case anybody wants to. Where the heck is it at? So that's right here. And it was very encouraging. We had a nice showing. Most people do watch it after, but it was a very, very good environment. So that's neither here nor there, so that's up to you if you want to join or not. You don't have to be there in real time. We're in phase 3. We just finished the 8th week of classes. I'm blessed that we were able to do both this week. A little rough, but today was much better. So you can learn at your own pace, and then you can join the classes as much as you want as well. So what's going on today? We'll do the intro. Thank you, everybody, for the prayers, the blessings. The prayers are being answered as we speak. And T will probably be home for another day, maybe the whole week from school, but he's definitely on the right track today. I was able to get about 6 hours of sleep last night. Me and Julie kind of on and off. So feeling a lot better today than yesterday. I'm glad we took him to the doctor, even though they said to wait 48 hours. We said, screw that, and we took him in. And I'm glad we did. And the good news was, because we were able to push fluids, even though a lot of them came out, he had only lost about 1/2 of a pound, so it was very comforting to see that. He's just under 4 feet tall now, so he's had quite the growth spurt in the last couple of years. So with that being said, good afternoon. 2:20 p.m. Eastern Standard Time on this Wednesday, March 18th, 2026. I'm XRP Future Millionaire, and I reside in the great state of Michigan. I do appreciate all the prayers. I see a lot of you guys in the comments saying it. I like Bearded Viking's comment about positivity over negativity. We continue to pray for Mighty Marcus, for his continued fight, the good fight. He's fighting the good fight right now. We pray for the overall sanctity for mom and dad, Bearded Viking and his wife. And amen. So let's get into XRP. So what we're dealing with right now is XRP after, unfortunately, once again, which is not a surprise to us, we came up to that very critical resistance level. And we talked about that right shoulder, how it extended out. And we got a very firm rejection there at that. Once again, that $1.56 area. And the reason why that's so important, excuse me, it's so important because that was the descending triangle. And in lieu of breaking past the descending triangle resistance and not being able to push up out of it, this would cause a continuation at some point here. And the technical target is still 86.6 cents. The daily time frame significantly oversold. It's broke below the trend line, so we would expect some kind of consolidation. Today, the daily time frame, we had a push out on London time, which is absolutely normal. And the more you know about like the dark pools and stuff, and the high frequency traders, you would understand more why this kind of stuff happens. But we had a push out there appropriately too. It came up there one last time to a resistance area, and long behold, you know, we're dealing with now, once again, what's going on with this? It like froze on my screen. Hopefully you guys are still here. Let me try to open this back up. I don't know because it closed my channel for some reason. Let me see. No, I think it's okay. It just closed it. Okay. So, and we came up to that rejection point, and a descending triangle is simply just known for you have lower highs and you have a steady support that forms like a triangle in a descending fashion with the flat support, but the higher or the lower highs create that downsloping resistance, and it gave us a it gave us that perfect rejection up here once again. The daily time frame looks to be forming in a bearish fashion. We still can't 100% say until we get the daily close here, and it's still about 5 hours and 37 minutes away. Let's see. Trading view has been it's so weird since the update. Now I gotta put back on the time intervals. So let's see. We have to go into labels. Symbol label, price label, countdown to bar close. We want on here. Let's see what's going on here. Unless it says it, I just don't see it. Well, I guess not. I don't see it at all. It's been interesting since the update. It's really been interesting. So I know there's probably some who are experiencing, huh? Oh, it's sync. Awesome. Scale, index, logarithmic, previous day close, high-low price lines. I really want to see this. It's supposed to have the countdown to bar close, but it's not on there for some reason. Oops. I don't know, but I'm not worried about that. We can figure that out ourselves. So with XRP, got that rejection at $1.56. The 4 hourly's pushed into oversold now. So we've come back down to that minor liquidity box we had in the middle of this very big liquidity box that we filled out. We're trying to back test this right now. One thing that we could end up doing, and I want to delete this now because this has been used for its advantage. What I want to create right now is we could have a little bit of a displacement on this drop down. So it would be normal for us to try to fill this back out. It's not a big one, but when it came down, it went up, bounced back around. But where this wick is at, we've technically not measured into this area. So I'd almost think maybe we could come back into here, even if we're bearish, and just try to fill this out in some way. It's not huge area, but I could definitely see us coming back down here and filling this out. So let's just see how we react in that little bit of a displacement we had. We never came back up really and retested it unless I'm missing something. Let's see. No, we just came straight down. I want to not say that this is displacement, even though over the top, when we came down, we never did anything up here. So the optic here would be if we did come back up, you might see some kind of fitting in here in the upper liquidation zone. And the best way that I could push that info out to you is to show you what I put out here for my own personal understanding of H bar. It had something over the top. Once it came into that box yesterday, I said, "Uh-oh," and it happened in the London time frame, which is, oh, there's the time frame. It's in the middle right there. But it came through this disparity in London time, so they swept up the liquidity. They went into the displacement area, and then it just overnight just ended up falling straight through. So that's definitely something that we have to watch for in all of these. But for XRP now, it's where is the next possibility of breaking through? Well, we're down 10.5% from the top in the last 24 hours, at least when we swept the low at about $1.44. We've coming down into this lower liquidity. We're trying to tap it on the top side, but right now with what came out with the Fed today is interesting because they said they're only going to cut rates one time this year. And if that's the case, that's going to be a very negative correlation between cryptocurrency risk assets, and it can even be for gold and silver and commodities and precious metals. But my understanding here is that we're probably going to come down here and sweep at some point that $1.40 level. If we can hold $1.40, it could clear us enough steam to get up to this wave E. I don't believe we've come all the way up there, although you could have said wave E was only coming to $1.60. I wanted to put it up here, though, around that $1.70. Because I thought maybe we could get into this liquidity gap area with the FEG CME. And the fact we never filled anywhere up there. Now we've got a smaller zone to tap. But that's what I like. I like to see stuff like this building up. Wow, Joseph Euler, thank you so much for the gifted sub. That means a lot to me. And also in Tom's Army for over 1 year at the I Told You So badge. And Global Exec gets the gifted sub. What a beautiful sight it is to see the community sharing with each other. That is amazing. Congratulations on getting your first month with the emoji badge of me being abducted by aliens, and that is my face superimposed on that emoji badge. Thank you, Mr. Euler, for that. And Emerson, thanks for the $4.99 donation, and also being in Tom's Army for over 3 years with the XRP Diamond Hands badge. Says giving it forward where I can. For the homie that wants Seals Q, please consider joining the T fam. We promise we don't bite. Yes, indeed, and thank you for that $5 super chat. And for anybody who's been paying attention to my analysis on Seals Q, I have not led you in the wrong direction. I talked about that $3.04 as an area to look at. But what I'm trying to see is if it, in fact, busts this whole pattern. We'll get back into the crypto real quick, but because we got that, that very generous donation there, we're either going to hold this 304, which I'm doubtful. Hold on, I'm letting my cat out because she's going to know the shit on me. Ghost, come here. Ghost, come on. Come on. Ghost. Come on, Ghost. Get over here. Sorry about that. She wanted food, so I want to make sure I gave it to her before she drives us all insane. So we have this $3.04 support we in fact came down to. We just had to be very patient because it did make a move up over $8. But like I said, no reason to buy it there. First chance to hold this trend was 304, but if it breaks through here, we've got a slightly lower level. Then we'll get back to the charts, but it's important for me to respect the ones who send super chats as well in real time. Underneath, we've got about $2.54 possible, or 59. But then if it breaks this whole thing, which I'm not sure it's going to, it'd be around $1.01. So we're going to see right now. We're in a very critical spot right now to see what happens there. So good comment. Great comment, Emerson. So anyhow, getting back to XRP. So my main point of contention right now is to see if we do, in fact, backtest this $1 and 39.40 cents. And see if we can hold that. If we hold that, we would have a chance to continue as we're broken out of a descending wedge. We've created a symmetrical triangle, so I don't think we're surprised in the fact that we've had such a big reversal. And that's where we're gonna have to watch is that $1.3985 level, and see if we can hold that symmetrical triangle. Now, when it comes to the XRP futures chart, we are back testing it right now. It formed its own symmetrical triangle, but it's about $1.44 over the top. So this would be the first layer that we're attempting to try to hold. If this fails, we would come down to $1.40. And if that fails, well, then it causes bigger problems. And you'll probably come to $1.34 and possibly worse. So that's 100% we're looking at for XRP. We had a technical move up for the futures that targeted about $1.5255. We had a nice overrun to $1.60. But be that as it may, once it tapped out, we ended up breaking back down and at least back testing for at least the initial moment here. Now, do I think that's going to hold? I think I'm a little more comfortable with the fact it hit there, but I think likely will, without, or after a retest of this drop point into that little displacement zone we talked about, I think we're probably more likely to come to $1.40, but we'll see. We'll see how it reacts today. But I want everybody to remember the visual. Just because the short term is very painful here for XRP, just remember, the biggest thing for us right now is we still need to pay attention to the macro. The macro is still so super bullish, and there's no way that I could have set this up any better than it is right now from a macro point of view. And I know the micro sometimes throws us off. It keeps our attention where it shouldn't be. And what we need to focus on, though, is the fact that we have an all-time cup. And the handle, the most bullish handle you're going to put on a cup and handle is that descending wedge. The fact that a descending wedge has fully emerged here with shy of one more tap of support is, to me, a very key reason why that this, if it comes down there, that is, we could find ourselves in a very, very promising way. If this weekly time frame gets invalidated, because right now it's on an inverted hammer, so we do need to watch to see if these levels hold, because it could speak to the fact we're coming up to $1.70, to that $1.77 zone, and it makes perfect sense on this descending wedge, even if it breaks up, to come into that area. Now, we could invalidate a move down to the bottom, but we would have to get up and over this pattern on the descending wedge, and then that would start to signal a more bullish reversal, and we could be coming into a short term, at least, bullish movement, even longer term if it wants to play past 348. But that's going to take some work. We still have a technical target at 86.6 cents in the shorter term, and the reason why that is so important is because it would be the third tap of the descending wedge. It's in our best interest to come down there, in my opinion, especially on the charts. But one thing we can't see is some of these. Okay, so the best thing I can tell you is that we only see about 30% of real volume. If you're in the class, you understand because we've been going over it. But if you're not, 70% of the volume you see is ghost volume. It doesn't even exist. It's basically the high frequency traders, which ends up being supercomputers and things like that, are moving this market with fake volume. They trade back and forth, and most of those orders go unfilled. They put them out there as limit orders, and then they just take them away. So it's very hard to determine what's going on with actual volume. So when we talk about support resistance, understanding gap areas, and understanding the pattern formations, and especially support resistance, it allows us to have a little bit of a fundamental outlook. Now, we can't react as fast as a supercomputer, but the point is we can stay ahead and try to be part of the 5%. See, we can't be part of the 95% of retail who loses money. Right now, 86.6% of XRP holders are negative, which means only 13.4% of holders or positions held, or total tokens held, I should say, is in the positive. So it doesn't leave a lot for, making mistakes and things like that. But that doesn't mean you give up. That means we use to our advantage the information we have, and that we try to take advantage. See, we're the plankton, we're the leeches, we're the ants in a bigger, wider community. So we need to not force ourselves against retail and the bigger players, but we need to start to get some of the footprints that they leave for us, the digital footprint, so that we can start to move and things like that. Things like that. Solo and Corium, they merged into one, and now it's called TX. And I told everybody not to buy TX when it first happened, even though it had a little bit of upward movement, because I said we have no idea of how low it's going to go. We talked about the box it could trade up into, and once it traded into that box and rejected off the top liquidity zone, that's a displacement area. Came back up to displacement, got rejected, and now look where we fell through. So I'm going to be a fan of looking at this when it comes back down. But yeah, Solo and Corium is going to be a problem right now because it converted into this token TX. They combined their tokenomics basically. It became one company. So that's just something to pay attention to. But yeah, so that's what's going on there. We have, let's see some of the questions. We'll get into XLM call Aldebrand. Absolutely. That's something we'll cover in this live. I picked Michigan to win it all in my final four bracket. Let's go. I picked Michigan before the season started at plus 2,000 odds to win the whole thing. So I haven't done a final four bracket. I might, but I picked Michigan before the season started. So if they win, put about, what was it, $400 in different segments towards them winning. I'd win about just over $8,000 on $400. Be pretty insane. Right now it's up like each of the bets are up like even a $15 bet they're willing to pay like $100 and something dollars. It's pretty crazy. But yeah, so I'm hopeful Michigan will win it all. If you go by the satanic numbering, their record finished perfectly for where they're at 32-3 and things like that. Just the satanic part of it is working in our favor when it comes to the Illuminati numbering. But anyhow, it's neither here nor there. So does my Solo turn into TX? I don't know. I don't know if it'll automatically convert, to be honest with you. I don't know. I didn't look deep enough into it. It's kind of wild how Coinbase has all these prop futures bets available. We have entered in it. Yeah, we have. And even in the markets now, you can not even trade the markets, but you can bet on whether they're going to go up or down at certain levels. I know I don't use it all that often, but crypto.com has that kind of betting as well, where you can bet in the hourly, the 5 minute, the 15, the 30 minute to see where the price is going to go in the next 10, 15, 20, or even an hour. And that's pretty interesting as well. I don't think it'll, from what I've seen, I'm not seeing any indication it'll convert. After a while, you're just going to be left in the sand because not everybody's going to know that happened. But anyhow, good comments in here. Good comment in here. But yeah, when I've tried the crypto.com stuff back in early 25, and it's so ridiculous the way it works. The only time I ever made any money on it was seeing a forward outlook where I thought things could play out a certain way. But what ends up happening, because it's manipulated like sports betting, is even if you have the right call, it'll wait until it's outside of that window where most money's at. And then immediately after that window closes, then the price will just magically drop or go up like seconds after they expire. It's no way to trade. If you're going to trade, you just got to trade. Get out of the gambling side of it, even though this is mostly gambling. See, Call of Eldebrand knows what I'm talking about. So, speaking of Call of Eldebrand, let's go over XLM. Down 2.41% on the day. And we came up just past that 17.4 cent target. It actually came up with over 18 cents briefly. Put in a double top. And we've got a bit of an area now where we did come back up. But in my opinion, like if you're talking about displacements, you got these lower wick boundaries that now all of a sudden we haven't tested back in this area. We leave these open, but you can come up higher. You can say it comes up all the way. You could say it comes up there, but you would technically have two areas where that wick came down to the top wick. That would technically be considered an upper displacement, in my opinion, where it came down and never retested that zone. So the question is, do we come back up into that area or do we not? So that's something to pay attention to if you entered a short at 18 cents. Because now would be the time for it to have a little momentum back to the top side. And then it would be up to us to get past displacement to push on. Remember, we still have a golden cross that hasn't been invalidated. So this was a good time for the markets to dump in this fashion. And this was a good time for the markets to dump. Now, if we do come all the way back down, you'd retest this area right around 15.2 cents. And that was just basically the symmetrical triangle breakout we had. And you can see it very clearly in the 4-hour how it set it up. On the push up, I mean, again, it's going to be a pretty volumeless push up. So we're not surprised we didn't get a lot of volume here. So That's just the way it works right now. Notice the interest is waning in cryptocurrency once again, as it will continue to wane. So it's up to us to stay in tune. You know, for the few of us that continue to show up in these times, I commend you, because trust me, it's not easy, especially for retail. When we only control a 5% movement, we control 5% of the market. That's basically all we can do one way or the other. But what we do is we command the majority of exit liquidity, or liquidity as a whole. And my whole thing is, for the hodl side of it, they need us to hodl, because then they can grab liquidity from everywhere, because the bigger players can't sell and make profit unless there's somebody to take it from them. So just remember that. I'm just watching Jerome Powell because he's talking right now. But yeah, he's just talking his nonsense. I don't really. The Dow Jones is down 592 points. The S&P is down 60.6, and the Nasdaq's down 204. So 1.25% for the Dow, and just under 1% for both the Nasdaq and S&P 500. So, you know, it's definitely getting hammered. All markets are doing pretty bad for the most part. So, but anyhow, XDC, yeah, he is. XDC is down 5.71% on the day. And if you guys remember, we talked about moving up to the 200-day and then having to back test the breakout. And then maybe we could break up to 3.5. We didn't quite get up there. We ended up getting right to about, we can delete this now because the movement up didn't get to 3.5. It only just got above the 200-day and the 4-hourly. So 3.47 instead of 3.5. That's pretty close. And now the back test has brought us back within that little bit of a, I guess you could call it a descending wedge here. If you want to, I wouldn't argue with you. But it's definitely not holding it as of right now. We're back inside of here. It's currently paused. What is paused? So as soon as I can trade it, and I'll swap it for XRP. Nick, what's currently paused? I'm sorry if I missed what you were saying. At first I thought you were talking about the live, but I can see it's working on my other screen. Let's see. Oh, maybe you're talking to Zalim. I'll let you guys continue. But other than this, if we can't hold this area, it may give XDC no choice but to swing all the way back down. And this would be pretty interesting if it came all the way through here. But the next big area to tap down, if it breaks this consolidation where it's tried to back test and it fell back within, would be around 2.6 cents. Oh, talking about Solar or TX. Okay, thank you, Bearded Viking, for that. And thanks for being in Tanzania 3+ months with the XRP Meteor. I greatly appreciate it. I see Zalim's in here as well, 1 month with the emoji badge of me being abducted by aliens. I know I missed a bunch of you, but as I see comments come in, I'll try to say hello. Soul Jeffy, welcome in Spellcasting Markets. So that's a little bit of insight there with H-bar. Rejected at displacement, came back within this little descending wedge. So in fact, it ended up being early. That technical target is now at the moment invalidated. And it's going to have to be reevaluated as we break out of here again, or if we come all the way back down to the bottom of the zone at 9.1 cents. So 70% of the move would probably bring us out into March 24th, which would be next Tuesday. Oh, the trading of Solo on Uphold. Okay, thank you guys for that added information. I was just making sure that it wasn't something to do with the stream. I wanted to make sure everything was going, you know, good for us. As far as it goes for Bitcoin, and I know we're doing a lot of talking back and forth, and I know this is not my normal time coming on, so I'm just proud to see 70 people, and I'll be honest. You know, it makes me so happy. And the only reason I deleted the live from yesterday is I didn't want everybody to hear my son throwing up and stuff. I didn't think that was appropriate because he started throwing up during my live, and it was you could hear it very closely as I had to rush away. And then we ended up taking him to the doctor immediately after. But the good news is he's on the mend today. He's doing a lot better. He's actually held 2 ounces of his formula down as well, plus a lot of fluid. So he's doing a lot better. So I decided to delete that live. That was not YouTube taking it down. I deleted that 25 minutes. I liked the information there, but it wasn't respectable to have that up there with my son throwing up and things like that. So That's why that is not there, that 25 minutes. I made an educated decision, an executive decision, let's call it, to not have that on YouTube. I don't think it was appropriate. So I hope you guys understand my reasoning for that. So we didn't get in trouble for anything we said. I don't want you guys to think that something bad happened. Let's see. Call Elderbrand says, hit that like button or I'll throw. Yes, hit that like button, please. We got 54 likes and 72 people in here. That's a pretty damn good number. Creamy Goodness says, excited to be buying the drop pop next year. Now, it's possible it takes until next year, but I still think before the midterms happen in November-ish, that we will have an opportunity for some of these lower buys when they come in. Maybe it takes a few months though to get there. But I think there could be an opportunity by the end of the year or late around August, maybe, depending on how long this takes, to have a nice run up at the end of the year. Thanks for the understanding, Low, and everybody else. Mrs. Stott, welcome in, and thanks for being in town for 6+ months with the XRP Predictor. It's such a blessing to have the core members in here. I noticed, too, we got a few hundred subscribers over the past week or so. We're at 50,200. We're bouncing between 50,100 and 50,200. So it's been a long journey, but we finally got over 50,000 subscribers. Can you believe that? That's a crazy number. I mean, we're on the verge of dropping below. We're like one over 50,200. So I don't want to say, I just say 50,100 because we're like right on the verge. So that's great. For everybody coming and going, completely understandable, especially with the market conditions. But I promise you, it's in your best interest to watch this in real time so that you can understand the dynamic of the market. Like with Bitcoin, and we can go through the total and the total 3 and things like that in this live as well. Oh, thank you, Zolom. I really appreciate that. Really appreciate that. Thank you, Zolom, and everybody who's so supportive. It's all because of you guys. I'm still stunned that we're at 50,000. It's a number that it's set in when I seen 50. I'm like, oh my goodness, that wow. That's that was a real honor to see that. So now with Bitcoin, let's get rid of this until we can see exactly what's going on. So Bitcoin's back test here, if it continues to come down, I would honestly say we're looking for some kind of test at about 68,500 range if it's going to come farther down. Yeah, I need 50,000 more for the plaque. I'll see you guys in 2032. At the ripe age of 48, I'll probably get the flag or the plaque. But hey, nonetheless, I'm very honored to be where we're at. And if we never get to 100, we never get to 100. I've already got a great core group here. Let's see. Yeah, Titcoin, that's what they were supposed to call it. So you definitely read the documents, my friend. That's actually what the original name was supposed to be, and then they switched it to Bitcoin. But yeah, that's where we're at with that with Bitcoin, and we do have major liquidity up here. We also have what looks to be a pretty big displacement up here. Let's see. Up and back through. I would almost dare to say we've got a displacement zone up here that we could tap. Excuse me. And the other chart we have for Bitcoin, this little area right here, this is where there's a ultra lot of liquidity with the heat liquidation maps. It's piled in around 79 to 82K. There's a lot of liquidation. A lot of liquidation. Now, I understand a lot of people are coming and going because they're at work. This is not the most ideal time to do a live, I understand, but it was the one time today I had a chance, so I took advantage of it. Once XRP pops all-time high, your channel will go Mr. Beast. Yeah, the last time we had a big run is that last year we gained about 8,000 subscribers in like, what, 4 months, 3 months? Or in 24, late 24, and the beginning of 25. And that's when we'd have 600-700 people in the live when we were on that epic rally up to 370. Because, you know, a lot of people do have faith in what we do here, and they come here in real time for the numbers. I'm just grateful to have you guys here right now. I say it all the time. I'm just very, very grateful to have as many people as I do here in real time. 70 people, 60 people. I mean, it's phenomenal, especially when we've had so much sideways and down consolidation over the past 9-10 months. You know, so I'm internally grateful for everything I get from you guys. I'm being honest. You know, there was a time when I'd come on live and have 20 people. So to see on our worst days we have 70, 80 people, it's an unbelievable feat for this community. And I want to take this out because I don't want to foster the illusion of that right now. So this is where we're at. We're back within the liquidity zone. I still think, though, I can get rid of this because I would like to put this up here because I really do think we've created a displacement here with Bitcoin. It's not very big, but this is an untapped zone now. We filled most of it, but that's about as far as we got. So, you know, there's still about a $3,000 area, but we did tap it now. That's the only thing. We tapped that box. You know, I tapped that box. I appreciate that call, Aldebrand. I really appreciate that. Yeah, that was pretty cool, wasn't it? When we were getting 500-600 people in here during the lives. It was awesome. And it happens. Every time we've gone on a parabolic run, it's becoming bigger and bigger. I'd love to see your all-time viewership chart overlaid with the XRP chart. See how it looks. I bet it's fascinating. Ooh. That would be interesting, honestly. That would be interesting. I wonder if I could do something with that. When you have 1,000... Oh, that... And I single-handedly accidentally cost myself the viewership and a lot of subscribers because of this. Because of this update, the two of them right here, over 1 year ago, notice we were getting 4,800 views on those lives and 3,700. Now I get about 1,000 if I'm lucky. But this is when it all started changing. And when I did these, I had 400 and 500 people in there, and people were pissed. But I told everybody back in January of last year why I was doing what I did. I didn't sell XRP yet, the whole, you know, what I was doing, because we were waiting for that rebound back up. But once I put these out, you should have seen how things dwindled in a very real way. And it happened to me in 2021 as well, but I can't be afraid of losing viewers and subscribers by telling the truth. You know, so I would have rather, I got everybody in the bottom in 23, and I got everybody out in the top in 25, and that holds more weight to me. Anybody who wanted to, that is. It holds more weight to me for that to happen and then lose 60. And you see I have 60% less views in the lives right now ever since I did that. But guess what? I don't want people in here just because I'm giving them fluff. I want people in here because they trust what I'm saying and, you know, that we can do what we need to do. Oh, they were super rude. Super rude. I even got, like, emails where people were, like, personally threatening me. I shared them with some of you guys. But I'm okay with that. It happened to me in 21. It happened to me in 23. And it'll happen to me in 25. And it'll happen to me again. But, you know, sometimes when you're a voice of reason, that happens. Because you know what it is? I don't take it personally anymore. You know why? Because think about it. These people, they might have just been buying in, or they might have missed out. And now all of a sudden they're watching a station when everybody else is telling them it's going up. And that's also when I told the story in November and December about the gas station attendant in 25 who was telling me to buy Bitcoin now and crypto when I tried to tell him in 23, and I wrote him out a big long thing about tokens to buy, where to buy them, how to buy them, and what we're looking for when we're going to sell them. And he was not interested for the entire 2.5 years, basically, in that bear market. And I begged him in 23 to buy it. Then all of a sudden, 2 years later, when it had materialized, after we bought the bottom, he started telling me, and I said, this is the equivalent of the local shoe shiner back in the day telling everybody to buy. When the gas station attendee's telling you when to buy and he wouldn't listen when to sell, it's time to get out. And I said that was my overriding factor. And then all the social media stations that started to come about, talk about how XRP is going to infinity and how you need to buy it now. I came on and I said, listen, guys, this is retail telling you to buy. This is the ones who have no ability, no understanding, and they're getting bigger than I am because they're lying. And it's true. Stations got much bigger than I did, but guess what ends up happening? Every single person who watches those people gets crushed. If you watch what I'm doing, you can be part of the 5%. There's a 95% rule in crypto. 95% of traders in retail lose. Only 5% gain. So do the math. I've lost about 70% of my viewership since I told everybody to sell in 25 in January. And then I reiterated it in July and said, this is it. The market's over for XRP. The other ones you had to get out before in January. XRP gave us a little more time. But now the problem is all those viewers that left, they're holding 86.6% of the bag that's underwater. 86.6% of all tokens in circulation right now are underwater. That's a fact. which means only 13.4% of the total circulating supply is in the profit. Well, guess who holds about 12% of that circulating supply? All the institutions, XRP, the main players within the XRP ecosystem. So, I'm proud of that fact. I actually hold it as a badge of honor. And for everybody who stuck it out with me, by some miracle, we're over 50. I can't even believe we're over 50,000 subscribers. And I get a lot of messages. People will subscribe, but they say they can't watch me in the bear market. They'll watch me when it starts pumping. And it's like, preferably, I would tell the people when we had 600 people in here during the pump, I wish you would have watched me when there was only, because at the time, in days like this, there was only 40 people in the last cycle when it was bearish like this. Now we've got, even on a minimum day, 76 people. That's about a 70% increase, even on bad days. That's my biggest pride. I have so much pride in doing this, and I have so much passion that, nothing's going to change my approach. I can promise you that. There's not a single thing that can change my approach. In fact, I'm signing up to become, and I'm talking about the classes right now, not ones I teach. I'm going to be taking a certification course to be a CFA. It might take me 6 months, but I'm going to be a certified financial advisor so that I can give better input to my own community. I've only talked about that in the classes, what's going to be starting. And I was supposed to have a consultation, but my son got sick this week, so I have to push it back to next week. So at some point, I will have a CFA licensing. I'll be a certified financial advisor. So then I will be able to give financial advice, but I will have to do it on a private basis. So, has the Fed meeting started yet? We have, oh yeah, shoot, we could have watched this together. I'm watching on my TV. I forgot to put it on. Fuck. I am so sorry, everybody. That's what I wanted to get into. I lost my train of thought because of my son.
They didn't attract broad support.
So what we're going to do is we're going to go back to when Jerome Powell started speaking. How about that? So if anybody's interested, if you want to watch this with me, please sit here with me. Are you guys interested in watching this? Because if you are, I'm going to sit through this, and then we'll just continue this live until he's done talking, and then I'll go back to being dad. But we can watch this from the beginning. We'll watch this together so we can...
The median participant estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation forecast for growth? And I'm curious kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19
That's
reasons,
funny,
19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially it is that, the forecast is that we'll be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year, progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Ooh. He basically just said, okay, here's a hawkish moment. He basically just said, if these numbers don't change, expect either staying the same or a rate cut. That is a hawkish moment. That's why the market reacted so poorly during this meeting, especially.
Thank you, Howard Stein with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods. And on tariffs and on the rest of it, so for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
The consumer is going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. Now, it'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down, we don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement, and also, what you've written down before you'll be reluctant to move too far away from that, just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs, with little growth in either demand or supply. But the U.S. economy is doing, pretty well. It's just we don't know what the effects of this will be, and really no one does.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is, there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
So there'd be an offset.
Offsets, yeah.
So that's true. We have, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable, and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target and looking through the oil price shock would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be actually, and it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%. And I think it's important that we do that. Very important.
Nick.
Nick Tamaros, Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system, and we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system, so that goods inflation will return closer to what it's always been. I mean, it used to be for many years it was negative, and then the year before tariffs came in, it was 0, and it's running at like 2% now. So so that's kind of, goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive, because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates, or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks, and we feel like where we are now is just kind of on that borderline, the higher borderline of restrictive versus not restrictive. We feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services. But we're not seeing progress there. So we do, what we expect for next year is continued what we want to see.
No, it does. Yeah, YouTube doesn't take half of super chats. They take a smaller percentage than that. It used to be 50%, but it's down to like equivalent to their little cut that they'll always take. I don't know, 20% maybe. Just look at that as a tax to use the platform, but it's definitely nowhere near 50%.
For this year, rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chappelle. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and, in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core inflation, 2.8% headline. So we've been well above the 2%. That amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time, and that's a concern. We need to get back down to 2%, and we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
It's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed, despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. In a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there were there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think a good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless, something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
We did go through a long period where the shocks were all demand shocks, and so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing, and a very much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But it has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that I had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The possibility that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But but you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question now?
Oh, it was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing, that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service and business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee.
I don't know if anybody caught that, but that was very interesting what he just said. Very interesting.
Before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just...
if there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. When we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth.
Thank
Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves. With what happens in the Middle East, that's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I mean, I think that the theory is probably right. But as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing is, our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history, and then they built, based on the history that they're seeing of tariffs coming through into prices. They can now have an arc. And for all the tariffs, they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases. And we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to move they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Hi, thank you. Chris Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So
either way, it
never locks people in. People are more than happy to be proven wrong in either direction. And so I just think we do it. And I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think. But we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Brian. Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world, by the way. Everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet, and it will take some years of positive real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and what it does for us is makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and stable prices is half of our mandate. It's one of our two mandates, maximum employment being the other. I mean, look at every advanced economy.
Guys, I'm gonna have to get going here in a minute or so. I gotta go do some stuff here. About 5 minutes I got left, and then I gotta go regardless of if he's done. And we'll try to do some kind of analysis at some point here. But I'm glad we're able to spend so much time together. My son's been able to hold that at his feeding down for the couple of ounces, which is awesome.
In a democracy, and you'll see, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two questions. One, how high would oil prices and broader inflation have to go, and for how long, for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
I'm not going to give you an example or specific answer on the first question. We're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. In terms of diesel prices. So your question there is, are we concerned about it? I mean,
how concerned, and whether or not it will drive up, the cost of food and other goods that really rely on it to move across the country.
It's a more general concern than that. It's diesel prices because that's transportation of food and things like that. There are just lots of ways that oil and derivatives of oil get into the production and transportation of many, many things. So, and those, there are big effects in headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it, but we're right at the beginning of this, and we don't know how big we just don't know how big this will be and how long it lasts. It may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.